following Iran's missile attack on Israel. Now, for more on the market impact, let's bring in Sylvia Jablonski, the co-founder and CEO of Defiance ETFs. Sylvia, maybe let's just start first with your take on what the market price action has been today and what it tells you about what investors think of the growing Middle East conflict as we currently stand.
Hi, Dom. Good afternoon. Well, today's market action reminds me a lot of what we saw when we heard about the Ukraine-Russia war, right? I think, for decades and decades, it was pretty much smooth sailing. There's always things going on in the world, but over the last couple of years, these geopolitical threats have become realities. And when that happens, investors tend to panic, and we start seeing them, fire sale a lot of their holdings and perhaps reallocate to different sectors of the market. So what we saw today was sort of just that, right? You saw the Mag 7 fall, a lot of the ex-Mag, so the other stocks in the S&P 500, particularly those in the defense area, start to gain some attention and action. You saw crypto fall, right? So it's days like this where we're reminded to stay diversified. And market psychology, although the Mag 7 are great, stable balance sheet companies, investor psychology tends to go to defense stocks. It tends to go to things like uranium and, right away kind of like spinning the wheels of where this will go if it escalates.
Do you also think it's interesting that it seems as though the volatility response to some of these types of events has gradually trended towards dampening over the course of the last maybe 10 or 15 years, that the reaction just gets a little less intense each time around?
I think it gets less intense each time around, and it's really hard to comment on what's going on in the Middle East because we don't, the truth is we don't know the outcome. But, a lot of times we get news that, that the outcome could be more stable than we think. And in a lot of situations where we see these threats, you kind of see stocks fall and then investors kind of come back into the market and benefit from buying on the dips, and they diversify their portfolio and, again, benefit from like the ex-Mag and the defense names and oil and gas and uranium. And then the market kind of chugs along, right? But it's a little different, right? I think this is a big conflict in the Middle East. We also have a presidential election, so I do think that there will be some investor panic and sitting back and watching to see what happens until we get more facts about the future. But what that means for markets, if we take the politics outside of it, it probably just means diversification to ex-Mag and defense.
I wonder if there's a little bit of opportunism, sort of stock picking going on. When you see Intel as one of the biggest movers off the lows and think people are kind of waiting for it to, as Don would say, enter deep value territory, is that a name that you would also pounce on at these levels? APA also had a big reversal. It's up about 5% now.
Yeah, so I've definitely talked with you guys about this, Kelly, too. I'm a lover of buying on the dips, particularly when it comes to the AI names. We know that Intel has, some U.S. government backing, some of the names like Palantir that are the defense AI plays. Those are names that I'll definitely keep my eye on and kind of try to bump into. But then if you look at other names like MicroStrategy, for example, Broadcom, just like the big AI stocks, they're going to pull back today. As people kind of sell off. So those are great buy on the dip opportunities. But again, I would say these are great days that remind us that broadening your portfolio allocation is really smart because you kind of feel the pullbacks a lot less when things like this happen.